Something unexpected just happened in the Fraser Valley housing market. After months of extremely low activity, buyers are suddenly starting to come back to the market. Sales have jumped more than 36% in just 1 month. But here is the strange part. Prices are still falling and inventory is still extremely high. The market is still firmly in buyer's territory. So what exactly is going on? Are we seeing the first sign of the early spring market returning, or just a temporary bounce before things slow down again? Let's break down what the February number are actually telling us. The Fraser Valley Real Estate Board recorded 843 home sales in February. That's important for one very specific reason. It represents a 36% jump in sales compared to January. And after several months of extremely quiet activity, that kind of increase definitely catches people's attention. But before anybody assume that market is suddenly heating up, there is another number that we need to take a look at. Because despite that jump in sales, the sales activity overall are still 38% below the 10-year seasonal average. So yes, the market is moving again, but historically speaking, it's still moving very slowly, which means something interesting is happening. Buyers are starting to return to the market, but cautiously. And to understand why, we need to take a look at second signal that is shaping the market. Because while sales are beginning to move, inventory are still climbing. Right now, there are 8,344 homes that are listed for sale across the Fraser Valley, and that's roughly 51% higher than the 10-year seasonal average. When supply rises faster than the demand, the balance of power in the market shifts. That means buyers gain leverage, sellers face more competition, and negotiation power quickly moves to the buyer side. But here's where the story gets interesting, because even with the rising sales, prices are still being adjusted downwards. The benchmark home pricing across the Fraser Valley is now sitting at roughly $895,000, and that number matters more than most people realize, because it keeps the market below the 900,000 psychological level many buyers watch closely. Breaking down further, detached home sits around 1.37 billion, townhouses are roughly $770,000, and condos averages about $488,000. So across most property types, prices are currently 7 to 9% lower than the last year, which creates a very unusual condition in the housing market. Sales are rising, prices are adjusting, inventory are high, and that combination creates something buyers haven't seen in years. So if you are a buyer watching this market, today's environment offers three advantages that were almost impossible to find during the post-pandemic years. The first is choice. With more than 8,000 homes available, buyers can compare properties, neighborhoods, and price points more carefully. The second advantage is time. Detached homes are currently averaging about 47 days on market, condos are about 45 days on market, and townhouses are around 39 days. During the pandemic boom, many homes sold in just a few days, and today buyers are actually having time to evaluate decision, compare properties and neighborhood. The third advantage is negotiation power. Subjects are back, price discussions are back, and buyers are often able to negotiate terms that would have been impossible just a few years ago. But this environment also create an important question, because market like this don't stay balanced forever. So housing market moves in cycle. First activity slows, then inventory builds, and then prices adjust, and eventually buyers' confidence slowly return. What we may be seeing right now is an early stage of that shift, not a full recovery, but the first sign of movement. Buyer cautiously re-entering the market. Sales are beginning to climb again, which leads to the next question almost everyone is asking right now. Is this the bottom of the market? Now, the honest answer is that housing markets rarely have a clear bottom. Instead, they stabilize gradually, confidence slowly returns, buyer activity increases, and eventually the direction changes, which means the more important question might actually be this: not whether this is the bottom, but how early you want to enter the next cycle. Because depending on your financial situation, timeline, and goals, 2026 could represent a very interesting entry point into the Fraser Valley housing market. But that doesn't mean everyone should buy right now. In the next video, we are going to break down clearly who should seriously consider buying in this market and who may still want to wait. Because making the right move in a transition market like this can make a massive difference over the next 5 to 10 years. So see you in the next video. If you like this video and want to know more about real estate in Surrey and Langley, subscribe. Thanks.